Hi everyone, welcome to M Talks. This is Nikhil Mani,
This is Bibin Michael.
and we want to wish everybody a happy Thanksgiving.
Yeah.
And we're actually shooting this episode right in the middle of Thanksgiving, and it's a crazy week. It has been a crazy week so far. How was your week been though?
Week been busy. Like I don't know. It's like crazy busy, and a lot of things happening. And just before going into Thanksgiving, it's a wonderful evening.
Yeah.
And late evening, we wanted to finish this episode today.
Yeah.
And would like to wish everybody who are watching this or been supporting us. A lot of people need to mention here. So number one, like you guys, the subscribers, the viewers, thank you so much for all the support. It's means a lot to us as a beginner, new podcast. Definitely without your support, a lot of people. It's not for saying for anything, to make a credit or anything, but a lot of people been reaching out. The other day I was sending someone, the episode clip.
Mm-hmm.
So he sent me, "Oh no, we are subscribers. We get before you send us."
That's
That's
nice.
very very nice. Somebody from Texas was mentioning that. So that was very very nice to hear all those things. A lot of encouragement.
Yeah.
And,
So this Thanksgiving, we first Thanksgiving for our podcast as well.
Exactly.
And so we'd really like to thank everyone who's been supporting us, who's been saying all these nice things. Especially thank you to our families, our wives, our children.
For making our life so wonderful.
Yeah. Anyway, so what are we going to talk about today, Bibin?
So everybody is like on celebration mode right now. I mean, I think this is the kickoff for holidays in the US, right?
Yes, it is. Yeah.
And right before there's something else came up, Diwali,
That's true.
which is actually officially schools are off, or New York City is actually officially off for Diwali.
Right. Yeah.
So there's some contribution from India too. So basically, Diwali is kicking off the celebrations, the holiday celebrations.
That's right.
And it's actually going for very long. I think all 2 months going to be crazy, including till mid-January, I believe.
Yeah, I think we're all going to be in like a holiday kind of mindset. Even though people have jobs and everything, I think it's not as. It's almost like there's a lightheartedness to everything in life, and just like everybody's kind of chilled. And I mean, it's cold outside too, and so it's just it's a really good time of the year, as long as there's no snow.
But the white Christmas is always wonderful.
Yeah, for some people. Yeah.
It's nice to see outside.
Because of the season, felt it was important.
When we talk about the season, right? And this is the time of the year people spending a lot of money.
A lot of money.
A lot of money.
Everybody's spending all their money. Everybody's renewing their benefits around this time of the year. Actually, last Tuesday, I think till November 30th. Some people have, but a lot of people are adjusting their benefits from their workplaces, their insurances, all of those different things.
When you talk about that, I think we did mention this one previous episode. So if you have any employer is giving you any life insurance from work, there's certain percentage of the insurance is actually free. I think up to 3 or 4 times of your income, it's free. So you have to enroll it though.
You have to enroll, and if you're choosing life insurance for your family members through your company, know that if you don't re-enroll, they're not going to be covered. You have to always click them in the.
Even though there's no change, you still have to go through.
Exactly.
And one more thing is actually this yesterday where I was discussing with somebody about the benefits. So this topic came up. So he said, "Oh, so the short-term, long-term disability, we have to enroll it. It's automatically." I'm so sorry, it's not automatic.
Yeah.
It has to be enrolled.
You have to enroll in all of these things that companies give you as benefit. A benefit, really though. I mean, yeah, you're getting some coverage.
Benefits, yeah. Leave it like that.
Let's leave it like that. One thing that I was while I was doing that with my wife this week, we were looking at our taxes and what our withholdings will be and stuff like that. And I called you and I was just like, hey, maybe we should have a conversation about taxes. So that's what we're going to talk about today. We're going to talk about how taxes. I think we're just going to talk about how taxes are, how people just go with the taxes. They don't think more than the fact that we have to pay taxes regardless of whatever.
Exactly.
There's no way of escaping paying taxes, and that's true for most employed folks. Most people that are working.
No, one thing is true: we cannot avoid tax.
In one way or the other, you're always going to be paying
Have to
taxes.
pay taxes.
There's indirect tax that you end up paying almost on an everyday basis whenever you buy something.
Every day.
Every day. And New Jersey's got a pretty decent sales tax with everything that you pay for. Thankfully, we don't pay taxes on clothes and food and medicine, but everything else you're paying a tax. So I thought it would be an interesting conversation to have, kind of give our perspectives on it. Maybe give people some ideas of what they could do. And obviously we're not tax professionals, so whatever we are saying right now is what we know of, but we are not saying that if you want to verify with your tax professional, your tax attorney or your accountant, and go from there. But
So to add on to that, you cannot avoid tax, but you can always optimize it.
yes,
That is the key. The key point today we will talk about is optimization of taxes. So how we can get benefits. So before we go into that route, we need to know what kind of taxes we've been facing every single day, right? So basically you can differentiate into 3 different things, like tax, what we pay tax now, or what we pay tax later, or there are some areas we'll be able to get some tax advantages.
yeah,
So all those 3, if you can properly go through it and find out which area you can get benefited, and utilizing those benefits will be the key.
right,
Not trying to avoid taxes, never going to take you anywhere.
Yeah.
It's actually going to the wrong route.
yeah,
So we're not encouraging anybody to on that route.
right,
But what are the things we pay tax now? So first thing, our salary.
yeah,
We don't even see our full salary before tax. Tax comes first, then we see the salary. So
it's crazy.
exactly.
If I'll just give you a personal accounting thing. I just realized we are paying close to 40%, I think, in taxes.
Up to 40, yeah.
Almost, yeah. So if you look at state, New Jersey, and federal, we're living in one of the higher tax towns or states in America. So people who are in Texas and Florida don't have to worry about some of the things that we worry about.
Correct.
But at the end of the day, it's like tax planning is something that is important for every family if you want to set yourself up for financial freedom, even as an employee. There's ways that you can structure your life where you're taking most of the benefits. In that situation, there's an aspect of the retirement accounts that come into play. So for most people need to know that your taxable income is your income. If you don't use your company provided 401k or your IRA accounts, Roth IRA, traditional IRA, whichever one that you're going to be using based on your income, and you have in the 401k, you get to deduct your income by, I think, 20,000 next year, and in Roth, I think it's about $7,000 or 79 grand or something like that.
6,500.
6,500 is this year. I think next year is
Next year is
7,000. Yeah.
7,000.
So that's $27,000 you can reduce from your income, that the government will let you move that money into your retirement accounts, and then they're taxing you off of whatever money is left, which is a very important thing to know, because if you're in your 150 and as a family you guys are making $200,000, you're effectively, you can reduce your taxes from a 25% or 28% bracket to a 22% bracket, I think 22%, if you're able
24 to 22, correct.
Yeah, if you're able to do this and reduce your income dollar for dollar, it's an absolute it's an absolute must when it comes to financial planning for a family, that you take advantage of that.
One option is like that you can reduce tax right now.
right now.
But eventually, yes, you have to pay tax for entire money. So what comes under tax now bucket other than salaries? Salary already taxed it. Okay, we don't need to tell them what to do. They will do how to deduct it.
Well, there's some guidance where you need to adjust your W-4. Most people don't know this. They just default their W-4s and then they let the company take out the taxes. What their
W2?
W-4. There's a thing called W-4, which is basically your withholding statement.
Tax. Yeah, correct.
So if you don't adjust that based on your needs, obviously, like you said, you're waiting for a tax return at the end of the year because they're taking more money off your taxes if you don't do it properly.
Correct.
So I mean, but
usually some people consider this as a savings.
Yeah, they wait for the 1 year tax return to come for savings, but what they don't realize is that money, if they had it with them, they could
have grow
they could put it in growth products that will.
So when you talk about growth, the money already taxed you're getting into your hands as a salary. If you do that, invest anywhere, and you make any growth on that money, the growth is taxable.
Right.
So basically, the 100% money on that criteria comes under taxable.
Right.
And the second portion you already discussed a little bit. The second portion is actually our retirement fund.
Yeah.
Our IRAs,
401ks,
annuities,
yeah.
401ks, all those retirement. It's called tax-deferred categories.
Right.
So what that's simply tax-deferred, giving us opportunity. We don't pay tax now. We can save some income. We can reduce some income at this point.
Right.
And whatever you're accumulating, whatever the growth. And one other point, we did discuss this particular topic on other episode. The employer contribution, they're giving us
free money.
Pre-tax.
Pre-tax, yeah.
They're giving us pre-tax. So that money we have to pay tax. The money we're putting in.
We should just clarify. You're paying taxes on them when you withdraw from those accounts.
When you withdraw it.
When you're retired. If you try to withdraw from it before you retire, you're paying a 10% penalty on top of.
Not retired, 59 and a half.
Right, 59 and a half.
Your age is 59 and a half and you're taking out before.
Didn't they increase it to 65 now, I think?
No.
It's still 59 and a half? Okay.
So if you're taking out before, if you increase that, it's going to be crazy.
Well, but they're doing that. I think Social Security,
Social, yes.
Yeah.
But the retirement, not yet. No plan.
Not yet. That's
exactly.
a key word. Yeah, yeah.
So if you're 59 and a half or later, if you take the money out,
you don't have any penalties.
Only tax.
Only income tax. Yeah.
Only tax, no penalty.
Right.
But if you're touching it before, 10% penalty on the top of it.
And then there's a minimum withdrawal that you have to take per year on the account.
That's up to, from 73 year old.
73
It was 72. This year increased to 73.
Year, yeah.
I don't know about next year. I haven't looked at it yet.
Yeah.
But if you don't take the money, you leave it there. They penalize you up to 40%.
Wow. That's crazy. So like basically what we're trying to say is the government's going to get their
tax,
their money regardless.
No matter what, they will.
But there's, if you're a lifelong employee, you need to sit down with a financial planner. You need to figure out how to maximize your benefit. And what most people don't recognize is a lot of people, especially in the self-employment world, and businesses and business owners and entrepreneurs, the biggest advantage for most of these folks is the fact that they can use the tax code for their benefit.
Exactly.
We're able to expense cars, marketing expenses, different things that we are able to write off that employees can't. And I'm not saying that that's the main reason why you should become an employee, but there are certain benefits an employee can get if they properly financially plan. And so that's why we wanted to talk about this, because I don't know if people are actually taking advantage of what is available to them. So you taking advantage of the tax deferred bucket, let's say, that's very important for our listeners who are employees. Like, you need to talk to someone who can advise you on how to do that. And you need to talk to someone who can advise you on your tax never bucket, which now I'll ask you to explain that.
So the third bucket, it's purely called tax never or tax free or tax advantage. You can call it in many ways, right? So how that works is actually the money from your salary, which is already you pay tax once.
Right.
So you have the choice where you can pay tax. You can pay tax pre or you can pay tax post.
Post,
right?
yeah.
So here you're paying tax now. The money you're putting in a particular bucket, there's several products in there. We'll mention couple. And if you put that money into that bucket, the money, your growth is 100% tax free.
Right.
So you'll be able to grow money tax free this country also, right?
Right.
But how many people know about it? How many people are using it? Very few.
Yeah.
So what are those products? Few of them, like many of them, like know about Roth IRA. Right? Roth IRA is one of the product that we can grow money tax free. And what the other is actually municipal bonds. The bonds is possible, and right now I think bonds are in the high peak time because of the market crash.
Yeah.
They are giving
Pretty strong, returns.
rate of returns, and that is also tax free.
That's why everybody's fixed. Everybody, if you're on this one, asking why fixed deposit in America has gone up to 5%, it's because the bonds and the treasury.
It's simply market crash.
It's not market crash yet. They're trying to counter it, but what's happening is all the municipal bonds and treasury bonds are now desirable, and so the banks are able to give you more money to save money.
It's not for permanent.
It's not permanent. No, for a limited amount of time.
For currently,
Yeah.
and the bonds also limited.
Right.
Not unlimited.
Right. I think it's like I think the most is like 3 years or something. I'm not sure. Like
So it's actually go with the 6 years right now. And so they actually, I recently went through that actually. If you want to purchase a 100,000 bond, you can pay for 82,000, get 100,000 bond, and they will give you 4% straight return for next 6 years.
Okay.
And you can get the 100,000 after 6 years plus the 4%. So average you will get about 6 to 7% when you look around.
Right.
But it's limited.
Right.
So one guy I was talking the other day, so he said 100,000 you can purchase. I said, and what is your availability? He said, I have only 32. So that is the problem. If it's something good out there, grab it or someone will grab it.
Yeah.
And the third option is actually how you can grow money. Actually, there's some of the life insurance. So I think you mentioned last time, right? So
Yeah, I talked about indexed, more
index,
like
right? We're on the strategy side.
the strategy side. Yeah.
So there are some of the life insurance also you can grow money tax free.
Certain life insurance policies.
Correct, certain, right? So these are the area basically you have to use it properly.
Right.
And one other area I would like to mention, like when we meet people or the clients, right? So what is we usually hear people was asking, oh, the 401k is tax free after 65, right?
Yeah, that's not true. That's not true.
That's not true.
That's not true. You know, we can only talk about we only do like short podcast times. So I mean, you can't really cover these subjects in detail. But our hope is that we can kind of get you guys at least interested and curious enough to be maybe reach out to us. And we can advise you guys on what are the things that you could do.
Before you close out,
sure.
We need to add one more thing to that. The age 65 later, it's tax-free.
Yeah.
People think it's a real big myth.
Right.
So what happened after 65? People usually think, now I'm working, I make money, so my tax bracket are high.
Right.
So when I'm not working, I'm retired, my tax bracket will be low. Is that real? No, absolutely not. It purely depends how much money you will take as income, and your tax bracket will be determined by the income you take.
Right.
So where you're going to take money or your income when you're retired? Maybe your 401k, maybe your pension, maybe your social security, maybe
combination
if you have
of all of this.
If you have assets, maybe a rental.
Right.
Any of these things, it purely depends on how much money you need at your retirement. Take an example, you need $10,000 a month. You may need about $120,000 a year. On that case, you may take out maybe $150,000. If you take $150,000 from your 401k, that is your income that year, and your tax bracket remain pretty much the same what 22%. You are right now.
Yeah. You're at 22, 24%.
22%. I think up to 189 is 22%. So he will be at 22%.
Right.
So it's a real myth. There's no such thing. There's no tax redemption or like free tax, nothing outside available when we get into retirement. If you plan it properly, you can explore or you can utilize the tax-free benefits at the retirement time. And there are people in this country also pay zero tax when they're retirement.
Right.
They need income, they're taking income, but they're paying zero tax. So how the zero tax strategy works? Reach out to a professional. Reach out to us. Put comments, and if you have questions, put comments.
Yeah, and if you want us to reach out to you personally, just DM us in any of our social medias, we hope that everybody has a good Thanksgiving.
Exactly. So
And
enjoy.
Thanks everybody. Thanksgiving week.
Yeah, Thanksgiving week.